What's up, guys? Kevin Cage here with another crypto update. Hope everybody's doing well. We're going to run through some recent news today. I did want to start this video off with two important clips. So we have one clip of Larry Fink that I'll play, and then this clip came out yesterday by Cointelegraph. So we have Standard Chartered Executive says that Bitcoin is to hit 200,000 by the end of 2025. So again, more people are showing the arguments of another liquidity cycle for the crypto asset class. Historically, Bitcoin draws major moves. We also have a crash of Bitcoin dominance, and this leads to the usual alt season, which we haven't seen yet. We have not seen the large crash. So I've already shared my personal expectations in previous videos, and just remember the video that I did back in March. I know that one, out of the other ones, didn't really have many views, but I measured all of the other cycles, from bottom to bottom, top to top, halving the top, election to top, election to first major move, all of these numbers, and I ran it and looked at all of these past three cycles, and every single number shows 2024 or 2025. So that's why I'm just awaiting for the first major move for Bitcoin, that first monthly candle taking out the previous cycle top like we've seen during the previous three cycles. The difference is we've been consolidating here for 6 months. So bottom line, we are still ranging. I don't know how long we're going to range or if we go a little lower first, but if and when we see that first major move, that first large monthly candle, then I will be calling for another cycle because that is the confirmation I need to see. And historically, after we see the first major move, that first large monthly candle, Bitcoin is running up until its cycle top on average between these three cycles for 200 to 300 days. So this is the same stuff I've shared all year, specifically for price action after elections, but let's dive into these clips.
The removal of SAB 121, which restricts some US banks' dealings in spot and other custody type issues in the digital asset space. So I suspect that will go. I think it might go anyway under Harris, but almost certainly under Trump. You'd very likely see a change at the top of the SEC. The SEC under Gary Gensler has been also very negative on the sector in the last few years, although we did see a little bit of a pare back of that late last week around the security type issue. But that probably would be removed as well. You'll probably see more ETFs relatively quickly. Solana, I would say, would be the most likely third one. So that's probably the big ticket, let's say, regulatory changes. And given what's happening more broadly in other asset markets, I suspect it makes sense to be buying Bitcoin and other digital assets anyway. Specifically, you've now finally started to see the US Treasury curve, albeit very, very slightly. 10-year yields are above 2-year yields for the first time for a number of quarters now, and that's a marginally positive story. Within that as well, you've got inflation expectations up a bit, whereas real yields are down a bit. So again, that should be helping at the margin. And I suspect next month, we'll probably also get a more positive outlook on the ETF inflows to Bitcoin, which have been very, very soft through the summer months. We're about $17 billion so far this year. I suspect those inflows pick up again into the fourth quarter. So each of those stories should see us higher. If it's a Trump victory, quite a lot higher, up to 125 year end. Next year, I think 200,000 by the end of next year, no matter who's in the White House.
And then, Jeff, just with the Fed expected to cut rates next.
I believe Bitcoin is legitimate. I'm not trying to say there's not misuses like everything else, but it is a legitimate financial instrument that allows you to have maybe uncorrelated, non-correlated type of returns. I believe it is an instrument that you invest in when you're more frightened, though. It is an instrument when you believe that countries are debasing their currency, debasing their currency by excess deficits, and some countries are. I believe we have countries where you're frightened of your everyday existence, and if you have an opportunity to invest in something that is outside your country's control, then you can have more financial control. And so I'm a major believer that there is a role for Bitcoin in portfolios.
Okay, so that was a bunch of information, and in previous videos, we've shared the predictions by JMP Securities along with JP Morgan for the overall Bitcoin inflows in the future, and we're not even close to those levels, so that is something I do consider. I've also shared this in a previous video, but I want to reshare this for anybody that missed it. This is an example of XRP during the last two alt seasons. So some assets move early, some assets have a lagging effect, but when XRP is pumped, at least in the past, historically, the only two times that XRP has ran and has drawn significant retracements and impulses is during the last two alt seasons. So we had the crash of Bitcoin dominance and Bitcoin making moves in all-time highs, drawing higher highs. So do fundamentals and news play a role? Absolutely they can, but just looking at the data, we have the exact dates of March 2017 and January 2018. The crash of Bitcoin dominance, XRP ran, doing over a 500x. We're going to scroll over and look at this last cycle, during the retracement, during the lawsuit, and also had a higher market cap at this time. So the same dates, XRP also drew a 10x. So friendly reminder, we have not seen Bitcoin's first major move or a crash of Bitcoin dominance like the previous two cycles. When that happens, I expect XRP and a variety of assets to perform. Ignore these trend lines, I just don't feel like removing them, but we haven't seen the crash of Bitcoin dominance, and historically, at least per the data, those are the times we've seen XRP run. Will it be different? Maybe. But this is at least why I keep sharing this, because this is what the data shows. An XRP relative to other assets in the top 50, top 100, top 300 is holding up very well. There are dozens of assets at new cycle lows. And I remember like it was yesterday when XRP was crashing during March 2020 after breaking over $3, going all the way down to 11 or 12 cents. The sentiment was extremely low. We just kept crashing. But then Bitcoin began drawing major moves, and of course we had the start of the lawsuit perfectly timed by Jay Clayton, and you can't make it up. We had one more big crash, and then we had the start of alt season. And remember that XRP is not a security, so in the case that Bitcoin in the future draws major moves and all-time highs, reaching 100K, 150K, or 250K plus, and XRP doesn't blast all-time highs later, I'll be shocked. Because historically, when Bitcoin runs, we have the crash of Bitcoin dominance, XRP plays catch-up. So again, with this, I'm not telling anybody how to think or what the right thing to believe is, because I don't know, but I'm showing you exactly what I believe and why I believe it. People can say whatever they want, haha, XRP still at 50, 60 cents, I know how silly it sounds, but all of the data I see, just measuring even the length of the previous cycle until the top, we're talking like 1400 days, we're still not there in terms of the length of the previous cycle. So there's a bunch of things that support it, specifically Bitcoin's price action, specifically after elections. And whether or not you think this is super silly or pure BS, I get it. I'm doing crypto YouTube videos when dozens of assets are sitting at cycle lows, so I get how silly it sounds. And this is never financial advice. You can take everything with a grain of salt shared by me or anybody else and have a believe it when I see it mindset, but I'm always aware of the potential. So here's looking at Bitcoin on the weekly time frame. So basically, if and when we see that first major move for Bitcoin well over 80,000 between now and May, I'm excited. That is the confirmation I want to see, or the first large monthly candle crash of Bitcoin dominance around 10% compared to the previous cycles. In that case, then I finally become a mega bull because I've witnessed the last two alt seasons and I expect another. But on the other hand, if Bitcoin loses 40K, loses 30K, we lose the uptrend, then I regret even sharing this and arguing for another cycle, but I believe another cycle comes. Next up, I want to play this clip shared by Good Morning Crypto. This is a really good clip of John Deaton that they had on their YouTube channel. This video might get demonetized or just clipped out, but I don't care because this is really important information.
Let's look at some facts, right? When the lawsuit was listed, XRP lost $15 billion immediately. People were liquidated, but Ripple spent over $100 million in defense. I spent all my time because the SEC did something that it had never done in 75 years of securities litigation. It claimed that the underlying asset, XRP, itself was a security. And then I challenged it and sued the SEC. And I simply said, just take away that language and I'll go away and my 75,000 token holders will go away. And they refused, and they actually attacked me and did all this other personal stuff against me. And then you fast forward 4 years later and say, oh, sorry, we were just kidding, or sorry, we got it wrong. No, it was intentional misconduct by these SEC lawyers. People should be fired. They should lose their job if they were in the decision-making process because it was blatant. Let's remember, a lifelong Democrat judge, Annalisa Torres, appointed by Barack Obama, agreed with me and my 75,000 token holders, said XRP itself is not a security. And when we purchased it on Coinbase or Uphold or Kraken or wherever, it was not a security. And that was known from day one, yet the SEC made us go through that extensive litigation and expense. We deserve reparations of some sort. We deserve compensation for that kind of misconduct. And I'm waiting to see what that IG report finds, because that could be the beginning of more litigation, except litigation on behalf of token holders.
For somebody just seeing this, having no understanding of XRP, to really paint a picture of all of the partnerships, the connections, the corruption on the SEC's end with ETHgate, like we need like a huge documentary on Netflix to even paint a picture. There's no way I could even accurately summarize it in like a 10 or 20 minute YouTube video. It goes incredibly deep. Even talking about XRP still, I have different people reach out or comments and go, oh man, you're still talking about XRP, nobody cares. Well, I do, and I know there's still people that do. The Ripple vs. SEC case is one of the largest crypto cases in history. I think it's really significant. And the reality of the situation is, because I think about this all the time doing YouTube videos covering crypto, is if and when we get another cycle, we go to all-time highs, I will be proud that I discussed crypto throughout this bear market, just like I was discussing it here during 2018, 2019, 2020. So this is binary. We either get another cycle or we don't. And I believe we do. I believe the crypto asset class becomes a major asset class in the future, just like all of the projections from BCG, from Ripple and Medico, and many others. And if we don't get another cycle, then I'm a scammer, I'm an idiot, I'm a shill. But these are my thoughts, and I've shared exactly why I believe what I believe. And that's the game I signed up for in the crypto asset class, and if the tokenization estimates are even close to being accurate, or 5 to 9% of global GDP, the upside is there. And I always try to share my predictions or expectations based off of price action in the past and previous cycles, but you just never know, because the future can always be different, or it can rhyme. Alright, a few other things. We've mentioned this before, but this is significant. We have Microsoft and BlackRock to launch a $30 billion fund for AI infrastructure. So two very large organizations here planning to launch more than a $30 billion fund to invest in artificial intelligence infrastructure to build data centers and energy projects. We also have right here Borderless Capital, so they're a backer in a variety of different crypto projects, and we also know they're a backer or investor in Peak Network, which is set to launch this month. And we also got news that Peak is backing Borderless Capital's $100 million DeepIn fund. So this is really interesting considering this $100 million DeepIn fund, considering the news by Reuters of BlackRock and Microsoft launching a $30 billion fund for AI. And other AI projects, Render, Tao's been performing really well, and even Fetch, which will turn into ASI. Also saw this shared by Altcoin Daily. Fidelity now holds nearly 1% of all Bitcoin, and this is according to Arkham right here. Fidelity has been buying Bitcoin nonstop for the past 2 weeks. Next up, we also got this news from Matt's institutional infrastructure over at BitGo, and we can see it's official. They are launching their very own US dollar-backed stablecoin, USDS. Now, why is BitGo relevant? Because they're a very large qualified custodian. Qualified custodians are going to be very important in the future for crypto custody. We can see all of the networks, exchanges, organizations that they support. HBAR Foundation, Polygon, Hashkey, Pantera, the Interledger Foundation, 21 Shares, and more. We can see they support over 850 assets supported, a variety of assets. Even years ago, we had this with XRP. I don't know if this is still active, but this is from 2017, when they basically built enterprise wallets for XRP. I don't know if I read this in the previous video, but David Schwartz shares some good information related to the obstacles for using stablecoins for payments as well. So for some people that are well connected to existing financial systems, they use an app and they like to get paid, but they'd rather you just put money right in their bank account, and from their point of view, the stablecoin is just some extra hassle. And there are people who are poorly connected to the existing financial systems. These people would appreciate access to new financial products, financial inclusion. The problem is that they need great off-ramps. If they can't use the money they got paid to pay at the grocery store, pay their phone bill, or pay the rents, the stablecoin is useless to them. So interesting to hear David Schwartz comment that stablecoins will face the same kinds of challenges trying to get traction in payments as cryptocurrencies do. Now, I do think it will be easier to get people to accept using stablecoins. Obviously, if they're pegged, they are perceived to be less volatile and less risky, but there are still risks. So we're going to see how the stablecoin market cap evolves. Today it's over 100 billion, and the projections are 2 to 3 trillion over the next few years. So we have BitGo, we have Circle, we have Tether, we have PayPal, and we have the Ripple US dollar. The big problem today is we want to see regulatory clarity globally. We want to see crypto assets being used as a medium of exchange by PSPs and financial institutions. And funny enough, a bull run would actually help that, because when we get a bull run, another liquidity cycle, periods of greed and euphoria, funding increases, development activity increases, and overall adoption of the crypto asset class increases. And something else I've been thinking about looking at the market cap of USDC along with the market cap of Tether is thinking about these predictions for the stablecoin market cap alone in the crypto asset class. So we're over 100 billion today. So we know the predictions are to exceed 2.8 trillion over the next few years, I think by 2027. So roughly measuring 2 to 3 trillion. That is a 20 to 30x from where we're at today for the stablecoin market cap. That would be insane. I know that is considering other things like the Euro coin that just got regulated in MiCA, other fiat currencies, other organizations beyond just PayPal, etc., but it's really interesting. Because discussing a $2.8 trillion market cap just for stablecoins, that is larger than the entire crypto asset class today. So is that a good thing or a bad thing? It could be a good thing or a bad thing. I perceive it as a good thing because that could be potentially trillions of dollars plugging into the crypto asset class, connecting it to traditional finance. But it would be a bad thing if the stablecoin market cap got a lot more dominance than altcoins. So looking at the USDC market cap and just overall its growth, we can see when Bitcoin drew major moves and all-time highs in 2020 up until its top around November, we can see how high the USDC market cap got. It was just a big period of expansion. Even looking at the market cap for Tether, another stablecoin, during the last 2 cycles when alt season occurred and Bitcoin is drawing major moves and all-time highs, we can see these large periods of expansion. Now, obviously, the concerns about Tether specifically causing a black swan in the future are valid. I just hope that's not the case. So point being is historically, and this is why all of us are rooting for another bull run, is when Bitcoin runs, we have another liquidity cycle, meaning new liquidity is entering the crypto asset class. It's not just being recycled necessarily between Bitcoin, stablecoins, and alts. We actually have new inflow of capital. And when we've seen that in the past, all boats rise. Bitcoin, Ethereum, altcoins, and stablecoins. I was charting with a buddy the other day looking at USDC dominance and Tether's dominance, so I'm curious to see how this performs in the future. Ideally, I don't really care about their dominance growing, I just want to see dominance return to the alt market. And according to Raoul Pal's Total Liquidity Index for another liquidity cycle for the crypto asset class, I'm fully entertaining this because in yesterday's video we shared that global liquidity is growing, with M2 reaching a new all-time high. So I know that Raoul shared these charts a couple months back, and I'm not sure if he's updated these for, better gauge on the timing, but overall his argument, his total liquidity index, all of that does support another cycle. All I'm doing right now for my personal expectations are things I already shared, just awaiting for actual confirmation with the first major move. So if and when we get another liquidity cycle, we're going to feel like geniuses. If we don't, we're going to feel like idiots. Next up, we're going to dive into iTrustCapital and call it a day. So we know that recently this month, the Fed did cut rates by 50 basis points, which is the first time since March of 2020. So this was the first rate cut since March of 2020. It has been a very long time, and we know in the list, in a video I did going over potential catalysts to bring more liquidity into the crypto asset class, rate cuts can potentially serve as a catalyst. So a lot of discussions. I've also seen policymakers seeing another 50 basis points of cuts in 2024, so we'll see. And if and when we get another cycle, oh baby, I will be ecstatic about having a crypto Roth IRA. We have iTrustCapital linked in the top of the YouTube video description. I've been using this since January of 2020. They have a lot of big news rolling out later this year, so I'm hoping to be able to share it with you guys as soon as possible. So this is linked right in the top of the YouTube video description, as well as in the pinned comments. You can start a crypto Roth IRA for tax-free gains with as little as $1,000. If you enjoyed this video, be sure to hit the like button. Thank you guys so much for watching, and I will catch you in the next one. If you enjoyed this video, please consider hitting the like button and sharing your thoughts down below. As always, you can find all links, including resources for charting, trading bots, platforms, wallets, portfolio trackers, and exclusive discounts in my link tree at the top of the video description. Thanks for watching, and I'll catch you in the next one.